everyone. We have prepared latest market updates for June 16th, 2022. Spotify takes its time hiring amid global issues. Spotify Technology SA will cut staff by 25%, according to an email from CEO Daniel Ek, making the company the latest tech company to cut costs amid economic uncertainty. He told employees Wednesday that the world's largest on-demand audio service will continue to hire, though it will slow down and be a little more prudent over the next few quarters. CEO Paul Vogel warned the investment community that the company is watching the global economy during an investor conference earlier this month. While Spotify has yet to see a significant impact on the business, he said, "We're monitoring the situation closely and assessing near-term headcount growth." At the time, Spotify offered investors an optimistic assessment of its business, predicting that its investments in podcasting and audiobooks would drive growth over the next decade. Shares of the Stockholm-based company hit a session high shortly after the media reported the news, rising 7.1%. Spotify joined a number of companies that have slowed hiring or announced layoffs in response to rising inflation and the effects of the Ukraine crisis. Cryptocurrency exchange Coinbase said it would cut its staff by 18%. Uber and Lyft Inc., which provide passenger transportation services, also reduced their hiring rates. Gold rises amid Fed's monetary policy decision. Gold rose Thursday morning as investors digested the U.S. Federal Reserve's monetary policy decision. Specifically, the Fed raised interest rates by 75 basis points Wednesday to curb inflation after the U.S. Consumer Price Index rose 8.6% year-over-year in May, the highest since 1994. Yellow metal futures rose 0.66% to $1,671. The dollar, which normally moves inversely to gold, declined Thursday morning. Meanwhile, the Fed's decision lowered longer-dated U.S. government bond yields and pushed the dollar up from two-decade highs, pushing gold up 1.9% in the previous session. Fed Chairman Jerome Powell said that the central bank will hold another major rate hike in July, but today's increase is unusually large, and I don't expect steps of this size to be common. At the same time, according to Michael McCarthy of Tiger Brokers, inflationary hedge buying, potential demand for safe haven, and pressure from the interest rate hike regime are keeping gold prices in balance. Bitcoin stabilizes after Celsius's account freezes. Bitcoin rebounded Wednesday after falling to an 18-month low held by the Fed's tough stance of inflation, even as the market collapsed this week after cryptocurrency lender Celsius froze customer withdrawals. The world's largest cryptocurrency fell 7.8% to $20,079.72, its lowest level since 2020. It has lost about 33% against the dollar since Friday and is down more than 50% since the beginning of the year. From a record high of $69,000 in November, it has fallen about 70%. Bitcoin last stood at $21,679.37. The digital currency sector suffered this week after Celsius froze withdrawals and transfers between accounts, sparking contagion fears in markets shaken by the demise of Terra USD and Luna tokens last month. The company has hired restructuring lawyers and is looking for possible financing options from investors. Celsius is also exploring strategic alternatives, including financial restructuring, it said. However, cryptocurrencies received support as the S&P 500 rose after the U.S. Federal Reserve announced it would raise interest rates, breaking a 5-session slump. According to CoinShares, a digital asset manager, there were outflows from cryptocurrency funds last week as investors anticipated tighter central banks' policies.